Hello, my name is Mark Nodal. I'm a financial advisor and I lead the wealth management division of the Noble Group. In this video, I will explain the key concepts of the Pride Rotation Portfolio's investment methodology. We developed the Pride Rotation 5, 6, and 7 portfolios as we believe there is a better way to invest than simply diversifying assets and buying and holding and hoping the markets go up. For more, see my video, Why Buy and Hold Isn't Working. In 2008, many investors sat and watched their investment portfolio decline 20, 30, 40% or more, ignoring clear signals that the market may go lower with no strategy to preserve their principal. It can take many years to recover from a 40% decline in a portfolio. The three Pride Rotation portfolios are designed not only to help grow assets, but help preserve those assets along the way rather than just riding the ups and downs of the market. Jim Cramer has a program on CNBC every weeknight called Mad Money. He is often quoted as saying, "There is always a bull market somewhere." The Pride Rotation Portfolio's investment methodology is designed to find the asset classes that are in a bull market every month and invest in them. How does that work? Let's take a look. Let's look at the investment methodology of the Pride Rotation 5. The 5 stands for 5 low-correlated asset classes. These asset classes are U.S. stocks, foreign developed country stocks, the long-term U.S. Treasury bond, commodities, and real estate investment trusts or REITs. At the end of each month, we isolate 2 asset classes of these 5 that have the most momentum. This is done by averaging the last 3, 6, and 12-month returns for each asset class at the end of every calendar month. The 2 asset classes with the highest average have the most momentum. We want to ride that momentum until another asset class overtakes it. This process is conducted every month with 50% of the assets invested in each asset class as long as both asset classes are trading above their 10-month moving average. The 10-month moving average is the part of the Pride Rotation portfolio methodology that helps preserve assets from big down markets. You are looking at 36 years of data, from 1973 through 2008, and in yellow are our 5 asset classes: U.S. stocks, foreign stocks, bonds, commodities, and REITs. Look at U.S. stocks. 73% of the time, U.S. stocks traded above their 10-month moving average. 27% of the time, they traded below their 10-month moving average. When above their 10-month moving average, annual returns for U.S. stocks were 13.5%, and when they were trading below their 10-month moving average annual return was a mere 3%. Plus, annualized volatility or risk was 38% higher when U.S. stocks traded below their 10-month moving average. Skipping down to the average, when these 5 asset classes traded above their 10-month moving average, their annual returns were almost 14%. And took less risk in the process as opposed to when trading below their 10-month moving average, and returns were a mere 2% with a lot more risk. When an asset class is trading above its 10-month moving average, you want to be invested. And when it's trading below its 10-month moving average, you want to be in cash or money market to help preserve principal. Now, getting back to the Pride Rotation portfolio methodology. Once the 2 asset classes for each investment are isolated each month, we want to check to see if either asset class is trading below its 10-month moving average. If that is the case, the assets for the asset class trading below its 10-month moving average are placed in cash alternatives or money market for that month. As long as each asset class is trading above their 10-month moving average, then 100% of the assets are invested, 50% each. The Pride Rotation 6 consists of the same 5 low-correlated asset classes as the Pride Rotation 5 with the addition of emerging markets, and the Pride Rotation 7 consists of the same 6 asset classes as the Pride Rotation 6 with the addition of Latin America. All 3 use the same methodology described in this video. This slide illustrates the point that once an asset class establishes momentum, It usually keeps it for several months. The colors show the 2 asset classes each month that met the Pride Rotation 7 methodology from 2000 through 2009. Even when the S&P 500 is having a bad year, there's always a bull market somewhere. Let's look at 2008. In 2008, the S&P 500 was down over 37% for the year. The Pride Rotation 7 would have been in Latin America and commodities through July, then mostly cash and long-term U.S. Treasuries for the remainder of the year. So what do we have? We have a non-emotional, systematic method of investing that isolates 2 asset classes that contain the most momentum every month. Rather than blindly investing in these 2 asset classes, we check each asset class for its respective 10-month moving average, above or below. As long as each asset class maintains momentum and is trading above its 10-month moving average, we ride the momentum until another asset class emerges with more momentum. In the event that no asset classes are trading above their 10-month moving average, then the Pride Rotation portfolio is in cash alternatives, helping to preserve your principal. This video briefly explains the key concepts that make up the Pride Rotation portfolios. If you would like more information about the Pride Rotation portfolios, send me an email with "I want more education" in the subject line, or give me a call. Lastly, don't keep this video a secret. Pass it along to others you know that can benefit. Thanks for watching.